The PSEi index kicking off from 7,000 finally for the first time since February of 2023 after jumping 1.2% on Thursday, supported still by net foreign buying of nearly 350 million pesos. The index on track for its second weekly gain, the number to beat 69.36. And so far, first 80 minutes of the trade for the day, the index still higher, charging up by 0.75%. We're at 70.73. It looks like 7100 is just around the corner. Joining us now for more in the markets is Sandra Araullo, Chief Investment Officer of ATR Asset Management. Hi, Sandra. Good morning. Thank you so much for taking our call.
Good morning, Mimi, and good morning to your viewers.
So Sandra, how best to play the markets right now? I mean, it's been a fantastic August and start of September. We're back to 7K. What do you make of this run-up?
Yeah, we think it's been a long time coming, no? How best to play it? We think cyclicals. That's how we're positioned for the equity portfolios we manage. When I say cyclicals, I mean we favor property, consumer, and Congos, no? We remain a bit neutral on banks, but they will benefit, or we think they will benefit from flows, foreign flows, which we've seen improve significantly. And also, they typically get used as country proxies for cyclicals by foreign investors. So there's also some upside that we see on banks.
Mm-hmm. All right, but in general, what do you make of the fund flows? We have been enjoying net foreign buying over the last couple of weeks. Net, are we seeing more money come in than money going out?
Well, it's been a pretty, not even anemic. It's been, outflows has been bad for some time now. We are seeing some signs of life. No, I think the U.S.-centric rally for the year is losing some steam. There's been a bit of rotation towards the rest of the world, including emerging markets. So we also look to our neighbors and we see foreign flows towards markets like Vietnam and Indonesia. In fact, Indonesia has been has hit an all-time high. No, so once foreign investors start positioning more with more conviction towards EM, the chance of the Philippine market attracting more flows has significantly improved, both from a valuation has been good for some time now. We're at 11.9 times versus, say, Indonesia's at almost 15 times. But it's sentiment, really. It's sentiment that we think is the catalyst for a likely rally towards year-end to at least what we think is fair value. And we've always said that from looking at fundamentals, the fair value for the PSEi is around 7,400.
All right, we're about 400 points away. In the meantime, this attractiveness that emerging markets are showing, I imagine this is because of the rate cutting cycle that we're all expecting. I mean, the European Central Bank just delivered its second rate cut for the year. The Federal Reserve is expected to deliver that first cut for the first time next week. Do you think it's now much easier to determine central bank moves and be able to position ahead? I mean, locally, the BSP still has two meetings for the rest of the year. That's meeting number 6 happening on October 17 and meeting number 7 on December 19th. Is it much easier now to predict, to read central bank action ahead of the decisions?
Actually, yeah, I think it's just confirming what we've been expecting or what the market has been expecting. So, if anything, there is a sigh of relief. You know, for pretty much the whole year, that has been the narrative that has been priced in. It's either are they going to cut? Aren't they? Is there going to be a recession? Is it there going to be a recession? It's going to continue. If anything, they're finally acting towards easing. After all of the confirmatory data came out, no? So inflation coming down, etc. So is it going to be easier? I actually think volatility might increase. But is that that's not necessarily a bad thing. The direction can still be, I guess, for the balance of the year, still positive, especially for those that are going to do catch up to the U.S., like other developed markets and emerging markets. But it's if anything, it's a little bit more normalizing in the sense that if we look to other asset classes, the behavior is a little bit more normal. No, rates are going down. Rates are or government bonds are regaining their role as sort of a risk-off instrument. So when you see these volatility spikes in risk markets, they play their traditional role in diversified portfolios.
All right. Just very quickly, Sandra, just a few interesting corporate stories that we have. Jobby Foods Group set to operate and license Milksha stores in America. Now, remember back in November 2021, JFC signed a deal to buy 51% of Milkshop International for $12.8 million. That's a Japanese company. And now they're firming up plans. They're entering a license agreement whereby MKSA has been granted the right to open and operate Milksha branded stores in California, New York, and Texas in the U.S. Franchising opportunities for other locations in the U.S. outside of these three states are likewise available through Milkshop Japan. I wonder, JFC used to be criticized for aggressively buying companies that took time to pay off. I remember Smash Burger, for example, Coffee Bean and Tea Leaf. Is Jollibee getting better at M&As, you think?
Well, they've certainly had the benefit of experience in that space, and I think M&As are by nature a strategic move, no, and the ability to execute and to extract value from these M&As are function of many things. Not least of them are the economic conditions. So we do think that as far as JFC is concerned, the strategy of diversifying away from the home market, consumer market, can only be a good thing. It's the execution risk, I guess, that is something that they can benefit from being able to manage better.
All right. From food, we want to go to energy. Alternergy. An RE Place pushing forward with its 500 megawatt target capacity by 2026 with a start, finally, of the full construction of 3 new power projects with a total capacity of 220 megawatts. Are you a big fan of RE Place, or do you think they're looking frothy valuation-wise?
Are we a big fan? We certainly see we acknowledge that theme of renewable energy and how there are structurally supportive developments around it. I guess it also, given it's a long playing game and there's a lot of, movement between value creation and price also, then it's a case-to-case basis. I can't really... We really have to look at the companies from the bottom and understand how they're executing and how it's looking like on a fundamental basis for the company. It's more tricky to paint it with a broad brush as far as the industry is concerned. But we like renewable energy. It's not just a local theme. It's very much under the umbrella of the whole sustainability. Energy transition, that's a global phenomenon.
And of course, if you like energy, what about the aviation industry? It's going to be pretty busy this weekend with the San Miguel-led consortium together with South Korea's Incheon International Airport taking over NAIA operations starting September 14 this Saturday. Of course, it's been the news all week in the run-up to that turnover. And you've got Insider PH also reporting, at least revealing that sources are saying the Philinvest Group, which is one of the big investors in the Clark International Airport, is looking to expand and now eyeing a Davao Airport project as we speak. Of course, Davao International Airport is the country's 4th largest gateway. Do you like airport planes, airport plays, airlines, or companies that are operating these airports?
Again, the devil is in the detail. No, we do like conglos. We think that the sum of the parts is more than the whole, so to speak. But again, it's really dependent on the company. They might be playing in the same space for certain segments, but it doesn't necessarily translate to us liking it as a whole.
Okay. So the whole is still greater than the sum of its parts. I think we're now ready for your blind item. Sandra, talk to us about the stock that you're monitoring closely and that you like. Don't tell us, just describe or leave our viewers to guess what this is. What do you have for us today?
Okay, for today, I will say it's a property company, and we like it because it's bucking the trend on pre-sales that we're seeing versus its peers. No, its competitors are showing flat or even declining pre-sales trend, while this one that we like has been growing strongly in the past quarters. Pogo is a sector-wide risk, but this particular company has minimal exposure because of the nature of its residential offering. So that's another clue. And they're concentrated in the higher segments, and its office portfolio is mostly high grade, so minimal Pogo exposure. Lastly, we speak to all of these companies, and this one in particular has articulated its mission to significantly increase the utilization of its land bank. So that's unlocking value in the next 5 years, which we expect to translate to better earnings visibility and overall improved profitability.
All right, we're just going to have to guess which stock this is. Thank you so much, Sandra, for joining us. Have a great weekend.
Thank you, Mimi, and you too.